Frank has attended a boot camp workshop out here and is applying the frame of reference and framework to his Forex trading. So I want to say thanks to there. I forgot to hit the recording button on the earlier one. So let me say thanks again to Samir for getting us moving on setting up an options group in the Campfire chat room so that we can get some option specialists in there looking how to exploit tortoise frameworks and setups through the options, and the ones that are already posted there look very promising. So an exciting addition to the team. So thanks, Samir, for getting us moving. I will be posting the daily report after I reboot my machine. The Adobe printer driver's not working. I got to reboot the machine, but that'll be up a little bit after the workshop is over. So I'm just going to brief the report from the slide deck today. So these were the things I just want to get started with. We're going to look at a debrief of the daily activities. So this is what we posted at the market open this morning. The futures were up large in all the indexes, as you can see. And my assessment, excuse me, was, that was just a cough. It wasn't the virus. So that the Super Tuesday blowout win by Biden actually sinks Bernie Sanders and democratic socialism as a viable candidate, in my opinion. So what that means is the market can now discount the cost of implementing a democratic socialist as a president, and you combine that with the Fed's 50 basis point cut yesterday, and the market exploded today. And so this is where it was at the opening, and it did double that well by the close of the day. So that was the market discounting fears and adding Fed gas, and so it surged 1,100 points today to offset the 900 points that it lost in the Dow. So that was our morning call, and so that really shaped our entire vision for what to do today, both on turbo intraday and for some swing trades, which we'll see when we get to the speed run. And as I said yesterday in setup for today's trade, that the most important thing was getting the market call and direction right, and that it was not a stock picker's market as much as it was getting the direction and then staying with the direction of the day. And it turned out to be the day was up. So I'm going to show you a couple different ways of how we got that done. By the end of the day, this is what it looked like. We had the triple leverage Dow. The U Dow was up 13.5%. The triple S&P was up 12.5%. And listen to the symbols that I'm going to talk to you about. These are the ones that we highlighted yesterday to be prepared for. Home Depot, Apple, the Dow, Tech, the S&P, Materials, Real Estate, McDonald's, Walmart, XLF, Cut, and Win. Every one of those was up massively today. And those are the ones that we highlighted to be prepared for today. So even though we got a predominance of daily winter, from extreme conditions come extreme results, and at turning points like today and this week, you can get some measured yet large results, and that's what we did with the intraday trade. So that was that. So I'm just going to go through a couple of the trades. So here's the U Dow, and this is my series. So there was a nice gap up, and about 30 minutes in, I bought the this move here, the cross of the VWAP with the RL10. So it had a low, a higher low. So I bought this. I got paid on the first little recovery. It then settled into a sideways quiet channel. I bought the breakout. I exited quickly when it didn't follow through, and it crossed back over the VWAP for a fractional loss. Still net positive for the day. Then it settled down into even tighter Z3P, or a sideways quiet channel, I should say. And then when it crossed the line here to go into summer once more, bought the Z2 breakout above the VWAP. It didn't fail. And then when it crossed the RL270, second position, when it made a high, pulled back, found support at the above the 270, and then resumed. I bought the emerging dragon for a third position, and then made bank here. So on just that trade, I just want to highlight, we're working with a 50-cent initial intraday stop. So that's 800 shares based on our $400 of risk per trade in that particular portfolio. and then so we're entering just around 96 and some change, and then we exit at 99 and some change. So that's $3 on 800 shares. That's 2,400 net on that little series. It goes sideways into a sideways quiet channel, finds support at the RL270, starts to break out again, so I buy it. I take a fractional. It doesn't fail further, but then gets me another RLXD entry, and then I get 1, 2, and 3 positions into it once more. The third position, because we're getting close to the end of the day and it gave up, ends up being a scratch. But on these 2 positions, we're looking at a move from just under 100 to about 101.5 on about a 40-cent share. So that's about a $2 capture on 40 cents at 5. That is 5 execution hours. And so what I want to say on this one is that even if you take the third position to be basically a scratch and not much to add, what you really have is a $3 capture on the first position, a $1.50 capture on the second position. So that's $4.50 of capture on a 50-cent initial risk. So that is 9 execution R, and the second series is 5 execution R. So that's 14 execution Rs. So that was the UDOW trade. The daily framework looks like this one, and this. Actually, let me come back to that one. Let me finish out the intraday trades. So this was Walmart. Now I've slowed this one down to the 10-minute trade because we're ready for the upside move by this one. So now about 40 minutes in, we buy the RL10 crossing. Let me pull this out so you can see it. The RL10 crossing the VWAP. It pulls back, finds support at the PSAR. Doesn't fail below the Bollinger Band mean. The market was doing well, so we stay with it. We get the RL crossing the dragon again for the second position. It gets into a nice sideways channel. Third position, and then cash at an orderly place as we approach the close of the day, and I want to take off all the turbo positions. So this one is, again, about a 50% initial risk, execution risk, and the capture was from 114 to 116 and some change. So that's $2 and some change. Plus on the second position, it's about $1.50 and some change. So that's about $4 of capture, plus another $1 of capture on the third one. So that's about, I don't know, $5 a capture on a 50-cent risk. That's a 10R intraday execution risk. We'll take that. This was McDonald's. So the first one, and again, this is a 10-minute. So this was the RL crossing the VWAP, scratching. It didn't fail further. We bought the RL crossing the VWAP again. Second position when it hit the PSAR flip. Third position based on money management when it broke the previous Z2. So now we end up capturing from 202 to 205.5 on the first position. That's 3.5 plus about 2. That's about 7R or $7 of capture on about $1 of execution risk. So that's about 7 execution risk. So that's about 20R for execution risk. And then as I briefed you before, I like to see your execution risk to be about 0.2 position sizing risk, so that you're never at risk of you're never betting the farm. So even that equates to about a 4 or 5 position size R's, and our goal is to get 2 position R's a week, and we got 5 today just on those 2 positions, 3 positions. So that's actually 2 weeks worth of work today. That could make your month. And then finally, the XLV, we had a nice gap up. You get, this is about a 30-cent execution risk. So you buy it, you buy the next excursion up on with PSAR support. So we end up capturing $1 on 30 cents, or actually $1.20. So that's about another 4 execution hours on the strongest sector of the day. I want to show this one. This is Kim, who attended a boot camp and is now tailoring the intraday trading to his personal style. And he's been working on focusing on one stock a day, and this one he's using is SPCE. We've been talking about that a lot. This is the Virgin Galactic, and that is sort of the speculative, volatile, high-tech. It's the poor man's Tesla and the next generation Tesla as far as high-speed, low-drag fun stock. So he ends up getting, in the day, 18 trades, plus 13 wins, 5 losses. The net R for the session is 15.5 in SPCE, so that's pretty good. Shifting to the daily debrief. So this is the 1 day. Let me pull out a shape here so you can see the pointer a little easier. So this is the 20-day and the 10-day look back. This is all on daily charts. So you can see the RL10 has bottomed out yesterday and now resumed today. So here's the 1-day look back, the 10-day look back, the 30-day look back. This is the magnitude of a 10% loss from the swing high. This was the next 10%. And today's closing price was here, so we are at about minus 8% from the swing high, which is near the all-time high. So we're already back in less than a correction. The MACD histogram in the Four Seasons is still in the winter, so we have a short bias. That means that we're exploiting the intraday opportunities and being very, very reluctant to take swing trades, and only those that are paid for with intraday turbo moves, and even then at small position sizes, and taking not much portfolio heat. We are not out of the woods yet, as we will see. But that's where we are. The RL10 has reversed, and price right here is just back into the dragon and at the edge of the river, so we're back at like Z-1. This was a Z-4 excursion, so this recovery has been 3 sigma inside the river. It went from about Z-4 back to Z3 to Z2 to Z1, and now is in the middle of the dragon. The next targets are the skin of the dragon, the PSAR flip, the RL270 fair value. I want you to notice how the RL270 is basically flattened out at 324. That's what I'm treating as the upside fair value. That was the previous belly of the dragon, so that's going to be resistance. So there's no such thing as easy money, but this move from 285 to 312 is easier than the next $20 of getting back to fair value and then the hump of the dragon. And then you can see the price targets on the upside where we would get crossing the Bollinger Band mean, crossing the 90, the hump of the dragon, the hump of the 10, and then the previous Z3 excursion as far as our price ladder. And then the price ladder on the way down is looking at the 1-day low, the Z-1 line, the 2-day low, the belly of the RL10, the Z3 excursion, the swing trade excursion, and then there were a couple other ones that are off the chart that look even further back, and then you have the 20% sell. So that's our price ladder inside the S&P. So that's guiding us in getting the market right. Okay. So let's shift. What's this from here? Oh, that's today's. That's from today's daily report. We'll take a look at that in a minute. I want to do a speed run real quick now. So this is all. Let me get this on daily charts. Now, I'm just going to show these symbols that we normally track. I'm not doing much swing trading right now. We'll see a few, but I have been concentrating on getting the market call right. But we will have some trades that we see. I just want you to notice the vast number of daily winters. These are the ones that are in the daily fall. So energy, SPCE, Tesla, Wheaton Precious, these tend to be the ones that were relative strength leaders and didn't even get back into the winter, so that on relative strength reversal back to the positive side, they could be very well postured, so that's why they're pretty cool. The daily summer, this is the S-Dow, Treasuries, and then the volatility. So those are really strong because of the magnitude of the sell-off. But if this is really a turning point like I'm claiming that it could be, then we want to be careful. Now the Aussie dollar has moved into the spring. The weekly summers, there's just a handful here. These are ones that have long-term goodness. Again, Home Depot and McDonald's, those are the two strong ones in the Dow, so that's why they were featured for our focus stocks. Tesla, Virgin Galactic, Clean Energy, and Treasuries on the defensive play. The weekly spring, these are the ones that are showing some potential on the longer swings. But, the SDOW and the volatility ETFs have decayed for so long that this little rebound that they have had lately. But yeah, so just notice that is already cracked. And if we look at a weekly basis, yeah, it went into the spring, but that run is already done. Okay, that run is done, in my opinion. I'll be prepared for both sides of the trade, but there you are, and then on the monthly springs, yeah, sorry. So the Aussie dollar, Alcoa, and these are all the materials and the international. So you get emerging markets, EFA, Japan, Mexico, Wind, U.S. Steel. Those all have monthly springs. So those were ones that had sold off deeply and are early in their long-term reversals. So when you look at something like U.S. Steel on a monthly chart, I want you to notice that this has, so you can see way down here. Let me turn off. I have to turn off the drawings here. But this had a long, horrible period of selling off winter, and now it's turned into the spring, right? So now when we zoom in and look at that thing, that failure to fail further is actually a reasonable turning point. We've already had the P1. So if we hypothesize this as a low around $7, you can see that gets through the dragon to about 12, and the PSAR flip happens at 16. So there's a lot of reasons to believe why this support level, this long-term support level above 6. So I'm buying U.S. Steel with a stop of 6 and buying it at 8 with a $2 stop. That's a 33%. What is the downside of that? If you believe, like I do, that the coronavirus is going to have President Trump figure out that the easiest way to beat Biden is going to be say, look, I've already made us energy self-sufficient, and now we're going to bring all the jobs home. If he was smart, he would hire Mike Rowe to be Secretary of Education and then give free tuition to everybody going to trade school and tool and die and rebuild the blue-collar workers and rebuild America's infrastructure. And so U.S. Steel would be central to that. So if you buy it at 8 with a $2 stop, that's almost like just buying a deep out of the money option. And this thing, within the last 2 years, was at 35. That's an 85% sell-off in U.S. Steel. Do you think that the United States is going to get rid of its steel producer? You're nuts. So just buy U.S. Steel, and with a very wide stop, and just leave it alone and see where it is in a year. And when Trump wins, watch that thing go. So that's the story behind X. Now, Caterpillar, another great American company, that little sell-off into the winter didn't even last as long, but you can get that at 127, and it's been as high as 170. So that's a 40% sell-off in a great American industrial company, and it's only just back to fair value anyway. So where's the risk? Take a $20 stop and use that as a Z3 excursion, and there's $40 of upside in Caterpillar. So what I'm saying here is that long-term, these 4 seasons of MACD give the opportunity to find some long-term investment strategies on the basis of engineering and technical analysis, and you can get rid of some of that noise by looking at the longer-term time frames. Because they're all fractal, these patterns and interpretations, skill at the intraday chart reading equates directly to longer-term chart reading and allows you to frame trades when it's calm and quiet, and you can be deliberate about this. This is how you get in front of the algorithms and the machine learning. So just telling you, that's the way to do it long term. So let's get back to the speed run and look at the swing trades on daily basis, and we're going to just sort it back by symbols. Okay, so Alcoa. This is bottoming out here. Let me put all the drawings back on. So we had covered, and now I'm getting ready to buy that one with a stop here. So I'm actually kind of, that's the stock of that thing. And then my targets would be fair. My long-term target is always like the fair value of the RL270, or the next PSAR flip, or the far side of the dragon, or the return to the Bollinger Band mean. So that I'm not going to say that in every chart, but this is a move then from 1288 to 15. So if you ended up buying it here with a dollar stop, you have a 2-to-1 just to get to the PSAR flip, and then you're in great shape. So that's Alcoa. Apple was a big mover today. That was a nice move, an inside day, and it closed strongly, so it was good to go. ARC is just one that we're tracking because it has a huge Tesla position. It had a nice rebound, and I think you could use 53 as support and just buy it. Aussie dollar is in the spring, as you can see, and it's moving out nicely. It just made a PSAR. So tomorrow should be a PSAR flip. We talked about buying this when it broke through the dragon, so I'm ready to buy that tomorrow. I think that's, I actually kind of like that one. And use the belly of the dragon, and then target the RL270, and then just for the heck of it, go all the way up to the Z3 excursion, and then longer term it would be up here by the hump of the dragon. So that's the Aussie dollar. Boeing, that failed to fail further today. So that's, if Boeing is good, it's going to contribute to the Dow. So get the Dow right. That's the easier, safer play. Caterpillar was strong. We talked about yesterday. We said we wouldn't be offended if you'd bought it yesterday at 124. If you did, you're $3 in the money and you're good to go. That's a high priority for trading going forward for the reasons originally described. Cliff is finding support along with the material sector. I'm going to hypothesize a support level there, and I think I'm ready to start buying that thing on a swing basis right there with about a 50-cent initial risk, and then fair value up here is the target at $7-ish. Cut did nice. We bought that one today, and we moved our stop up here to lock that in. This is already in the money, so I am liking this one. It's going to get all the way up here to 27. So we like Cut. Hooray for timber. Right. Diamonds were just brilliant today, and you already saw the UDOW, so I traded with a triple leveraged one. Devon Energy is showing that the whole energy sector is stabilized and it found support here. This is my target of choice, and I would treat this entire block sort of as the consolidation zone, if you will. So that's really where my risk box would be. That's how I just do some visual box trading. I'll buy anything, any momentum north of the yellow box with a stop down here at the belly of the RL10. So that's about a $1.50 of risk. Your target is up in here. Easy win. Emerging markets. Emerging markets are fine. This was the short that we covered earlier this week. This closed well. I'd be looking to buy it. I think if it breaks out above the 2-day high, I think I'd use, I would probably use the belly of the dragon as my stop, and this would be my trade frame box and my manageable risk box. I like that one. EFA is going to be about the same thing, no different from EEM. The rest of the world is recovering. The RL10 belly is in. Japan made the recovery too. So if they're not worried about the coronavirus, then I'm not. So here's the consolidation area for Japan, and buy the breakout of the box. Mexico, we're intraday trading that one. I kind of like the belly of the dragon as the risk. So if you were going to swing that one, I would buy this, and then here's my trade frame box on it. Off we go. Brazil, intraday only. It was not as impressive on the upside, you'll notice, as Mexico. That's why we were massively short this thing earlier and covered it at the start of this week. So this is not as impressive as Mexico. So what we would do is hybrid frog only. Don't worry about swing trading it for at least a week. Home Depot, massive goodness. We bought this one at 223 because it was the winner in the Dow. We locked in those gains today. It closed very well. So, I mean, what's not to love about these guys? Holy smokes. So it's going to go all the way and test the PSAR flip way up there. So our stop has got to be in like right here. Should have added a second position today, but I was busy with the UDOW. So that was a 218 was the stop. So that's about a $5 risk, and we are $16 in hand. So that's over 3R in 3 days. So pay attention to the relative strength winners at the turning points. Russell 2000, not as impressive as the Dow. Real estate is one where we had gotten long. So we tried this one the same way we tried Home Depot as a defensive play, but we ended up cashing it to just get a little bank, but it recovered really well. And so now even the defensive play of real estate is working pretty nicely. So my trade frame on that one would be, I think I would look at this and then put a stop here and a buy probably above the RL30. I think that's how I would trade that. My target would be up here at about 100. Oops. Sorry about that. Okay. McDonald's, massive goodness. We got the intraday trade. This is one where we tried like Home Depot that I just showed, only because yesterday had suffered so much. We basically ended up just scratching that and just capturing a little bit. But we got the intraday piece, and so now I think that one is still good to go. And I would be willing to swing trade that with a wide stop now. And I think that's the trade box right there. And I would buy any breakout above today's high with that much risk. We bought the PBW Clean Energy. That's doing well. That's going to go. And add your second position above the hump of the dragon at 43. The S-Dow, we're trading intraday. SPCE, I bought it here. I'm holding this. I'm just going to keep this stop in place. That is my speculative trade. I think it's going to be like Tesla when the market reverses. So we'll see. Speculation and fun. Simon Property Group, we had covered the double short. It's still too early to love this thing yet. And today was not impressive, so just keep your eye, stalk it. The triple leveraged S&P, we were short that one massively, but not so much now. Treasuries, we had cashed a double win here, 2 positions and a win. It's just kind of stabilizing right now. Stalk it and see what the market is doing. Tesla has rebounded, but today was not persuasive. So to me, Tesla is here's the box. I would trade Tesla in either direction with that box, and then just, let's see, in fact, I might even tighten it up on the upside and tighten it up on the downside, and then say, look, if you break out of the box in either direction, I'm long or short, with targets up here on the long side at 900 and on the downside at the belly of the beast at 600. So that's your trade frame in Tesla. UDOW has just been brilliant, and I'm long in the swing. Natural gas doing well. Oil recovered reasonably, not as good as natural gas and coal. The volatility is collapsing, as you can see. Walmart, brilliant and beautiful. I like it. I don't know why that's not showing up. Yeah, there we go. Wheat and precious metals is our defensive play in the precious metals. I like that one, and I'm long on a swing. Win, intraday only, but I love the fact that this is bottoming out. They are especially vulnerable to the coronavirus because of travel restrictions. But if there's any turning point on that, here you're looking at a bottoming out at 100 and an upside of 150. So even with a $10 stop, I'm ready to buy this on a swing at 106 with a target of 125 initially, then 135, 145, and 150. So I'm ready to buy that one right now. Even though, yeah, I know it's in the winter, but that thing swings so nicely, and that's going to be a massive overreaction. Last time it was down at this level, look what it did. 1 leg up, 2 legs up, 3 legs up. So I'm betting on that one. I would stop and reverse. I've already talked through U.S. Steel. Now here's a quick look at the 5 sectors of interest. Materials already recovered. Energy recovering. Still plenty of room to go. Financials got smashed. Worse than energy. But there's some play to the upside, and with the Fed pumping, they're not going to let their friends suffer. So that, I think that one's a safe bet. Technology is a safe bet. That'll lead us out of this hole. And then healthcare is really resuming. And is that profits for the coronavirus response? I don't know, but there we are. So that's a quick look at the speed run and a half a dozen good ideas. Let's see. So let me do the daily report real quick off the PowerPoint, and then I'll get the other, after I get rebooted, we'll get going. So the daily report, you've seen the health check. We are back into bullish volatile. No signals on channeling overreaction. You can see the 10-day max and min pains. We're getting ready to reverse on the risk Z from a 3 sigma adverse move. Lots of auto framers testing out well. Back to the 10-day high. You can see the winners and losers in the stack here. American Express, United Health, easy ways to get it done. In the ETFs, the big winner was Dow with a 13.5%, and then XLV Healthcare. That's where you look. And then the breakdown was oil exploration, silver, oil, gold, and treasury. So that's money rotating out of the defensive plays and into equities, and that's why that works so well today. Only treasuries are above its river. Lots of things are suffering below, but earlier this week was at 3 sigma below the Bollinger Band mean. Now they're all 2 sigma, the worst ones. So the recovery is already broad-based. Nothing is in a super pinch because everything voted directionally. These are all the mechanical swing trade frames for retest of the 10-day high, looking at the R multiples using a range risk. So lots of choices there, no squeezes. You see the 4 seasons of both the Dow 30 and the ETF 30, and then a summary of what I already briefed. Look how strong the market was today. That's guys buying the markets with leverage positions. They're getting it done there. That's why you want to concentrate on the things that were above the S&P in today's stack, and that's the Dow, the triple Dow, the triple S&P, Home Depot, Apple, Tech, and Diamonds. That's where you need to be focusing. The super defensive plays that suffered today, hey, if the market collapses tomorrow, that's not surprising in bullish volatile. And then the ones you would pick would be the S-Dow, the volatilities, the treasuries, Alcoa, and inverse of oil. So there we are. Multi-time frame index, you can see Pfizer was a big winner. Pfizer and Merck and the healthcare were the big winners. So if you want to build on momentum and you want to drill down from XLV, you go look there. And then consumer staples had a nice day today, as did utilities. And then the internationals all had breakouts on 3-day ranges. So that's the rest of the world reacting from the fear. The bottom is already in, it looks like, for 4 days. The slope of the RL30 is starting to roll up. It will cross, it's already at minus 3 sigma. When it crosses over the 10-period moving average, that will be the reversal signal officially. Notice how big that stretch was. That was a 5 sigma move back to the below the 200-period moving average. You can see the volatility is cresting and starting to suffer. And then the slopes of the RLs, the RL10 slope is reversed. The 30 has come back into below the to the bottom of its river down in here, so that's good. And the 90 is rolled over, so everything's looking fine. We're testing the bottom of the river. This support level held, and now the targets are the this resistance and that resistance. Okay, so that's everything I want to cover. We're 32 minutes in. Appreciate your time and attention, guys. I'll get this processed and posted and get the daily report printed as soon as I can. Thanks so much for your kind attention. Take good care of yourself. Keep your risk measured and your powder dry. I should also say that I put a notice at Patreon. The prices on the long-term services are going up, so it's your chance in March to lock in the lifetime pricing levels at Patreon now. And then on 1 April, the long-term discount program is going from $5,000 to $10,000. That gives you 50% off all of goods and services in the future forever. Never wears out. The cost of that right now is $5,000. On 1 April goes to $10,000. I think long term it's a good deal. If you're going to be around for a couple years, I think you want to get that done. That's my advice. Take good care, and we will see you in the chat room.